Now to some other news. The Tax Administration Laws Amendment Bill would enable the South African Revenue Service to share confidential taxpayer information with more government institutions. Could this tackle corruption, fraud and other tax crimes in South Africa? Now to answer this, let's talk to Phillip Joubert, the manager of the South African Institute of Professional Accountants Centre of Tax Excellence. Phillip, thank you so much for joining us this afternoon. Now, SARS has been able to share information with some of the institutions, but now with the amendment bill, my apologies, which institutions would be added to this list?
So the three institutions being added is the Companies and Intellectual Properties Commission, so known as SIPC, the Master of the High Court, as well as the Directorate for Non-Profit Organizations.
Now, what type of information is being shared? I think we could all be a bit more cautious about where our information is going.
So, firstly, SARS can only share information that they actually have in their possession. So that will be financial information that the taxpayer submitted. Could be addresses, it could be beneficial ownership information. And the beneficial ownership information, I think, is the biggest starting point for this amendment.
Now, Phillip, what is the prevalence of tax crimes in South Africa specifically?
The prevalence of tax crimes is quite high if you look at it, but it can be anything from a small vendor that has defrauded SARS with 8,000 Rand in VAT to some of the media reports where we've seen taxpayers owing SARS millions upon millions of rands. So the problem with tax fraud is that it's a very broad definition that needs to be adhered to.